Hi and welcome to Swissquote's Daily Market Talk. It's Monday, November 24th. The week opens on a cautiously positive note this morning after the worst week since early October thanks to one man, John Williams, who brought the idea of a near-term Federal Reserve rate cut back to the table. But will it be enough to reverse the rising pessimism about the AI trade and all the other things that are not necessarily going toward the right direction, like the tariffs, the inflation levels in the US, worsening sentiment and more? I guess we will see. The UK, on the other hand, will also be on the chopping block this week, as Rachel Reeves there will be announcing big tax hikes as early as this Wednesday. So we will talk about all that and more, but before we do, please keep in mind that opinions are my own and this is not financial advice. So the week opens on a cautious note after last week's Nvidia earnings didn't really go according to the plan. Swelling inventories and deferred payments raised concerns among investors about the strength of Nvidia's revenue and added to the worries that AI spenders may be spending just too much money, and for some by expanding a debt that they don't necessarily show in their own books. And I'm looking at you, Meta. So AI boom is turning somehow into an accounting stress among investors due to some companies' choice to do strange things on their books, and the latter may end in tears if history is any guidance. The interconnected nature of the business and the circularity of the AI deals warn that if one of the companies fail to pay a bill, well, we could see a domino effect across the sector go forward. So hope that will never happen, but it is a real possibility right now and investors are considering it. So nerves are calmer this morning in the markets, but not fully so. Alibaba in China, for example, jumped 5% today after telling that its Qwen 3 model attracted more than 10 million subscribers and could rival ChatGPT. The company will be reporting its earnings tomorrow and we will see how AI impacted the results. The Kospi index made a recovery attempt this morning in Seoul at the weekly opening bell, but gains are mostly given back since then as we approach the European Open, and the Japanese markets are closed today, so we can look at this very soft bank today and guess how investors are really feeling about the whole AI thing. But coming back to Alibaba, you know what I think about both DeepSeek and Qwen 3 models, right? These chatbots could be great for China, but they will hit the exact same barriers than the research platforms like Baidu, for example, as long as they can jump past the Chinese propaganda barriers. And it is not yet the case for the Qwen 3, who didn't want to tell me last week what happened in Tiananmen in 1989, remember? So the competition will be hardly global. So why do I still like the Chinese technology? Because the chatbots are just the tip of the iceberg. There is so much more to AI than just a chat box with ChatGPT or Qwen 3. AI will transform our societies if it's not already doing so. The way we work, the way we search, the way we make research, innovation, and the way we live simply. And I think the Chinese could eventually insert their AI capabilities in their and in our everyday lives faster than we think. So AI is not dead and it will sure outlive any potential market meltdown, but the short term looks a bit fragile for our favorite tech bros and their market valuation. So the S&P 500 and Nasdaq futures are slightly in the positive this morning following a slight improvement in the investor mood on Friday after the New York Fed President John Williams jumped in and poured some cold water on the heating market conversations by bringing the possibility of another near-term cut back to the table. And everyone heard that near term as another December rate cut, of course. So the US 2-year yield tanked back to 3.5%, and the probability of a December rate cut jumped to 70%, guys, from below 30% earlier the same week. Holly. While the rest of the Fed members kept repeating that it would be a better idea just to wait before doing anything more in December in case the inflation monster, for example, wakes up and starts throwing fireballs everywhere. But no, one man, just one dog, weighed heavier than all of the other members who sounded worried about inflation. That's also because he's thought to be close to Jerome Powell, but inflation is still near 3% and Jerome Powell knows and says it, which is also well above the Fed's official inflation target. So in theory, the Fed should have never cut the interest rates in September in the first place. And fun fact, we won't even get the most critical inflation report from the US before the Federal Reserve members gather for the last time this year in December. So they will just have to sit there and bet. They won't decide this December. They will take a bet. Meanwhile, consumer sentiment in the United States is falling to the lowest levels on record in the United States, even after Donald Trump announced that he will be lowering the tariffs on beef, tomatoes, coffee, and bananas. So the US dollar spent most of last week gaining some field against majors out there. The recovery was backed by a retreat in dovish Fed expectations before John Williams' dovish comments on Friday. And the greenback is under renewed pressure this morning in Asia toward the downside, but the Fed cut probabilities have themselves become quite shaky and volatile. So I'd say that the chance of a December rate cut from the Fed is just around a coin toss right now. And again, in theory, a no cut would be the reasonable way to go for the Fed, especially given that the Fed will start quantitative tightening in December already. So in my opinion, the Fed expectation could still turn less dovish, and that would support further recovery in the US dollar. But sterling bears won't need the help of the US dollar bulls to push cable below the 130 level this week. Rachel Reeves could do that with Grace come Wednesday, when she will be announcing the much expected autumn budget and potentially big tax cuts in the United Kingdom. At this point in time, no one knows what will come out of that budget to be true, but she might have to raise taxes as much as 30 billion sterling. A disaster. We've been reading in news the 50 shades of taxes that the Brits are facing right now on individual and on company level. And if I'm honest, I'm waiting the season 2 of the mid-budget crisis to unfold later this week in the UK if taxes that Rachel Reeves will be announcing don't match market expectations. But on a more optimistic note, such big tax hikes will be deflationary for the United Kingdom and will convince the Bank of England to cut the interest rates to clean a part of the mess as soon as December. And if, by miracle, Rachel Reeves gets this right, well, cable could even rebound and close this year above the 130 psychological mark. But to me, there is a greater chance that we will see agitated waters in the UK both for sterling and for gilts this week than the contrary. The UK needs a solid plan to survive the series of bad fiscal decisions of the past and return to growth. But higher taxes are good for the short run, but they kill growth in the longer run. And according to a Financial Times analysis, 3,790 company directors reported left the UK between October 2024, when Reeves' budget hit, and July 2025. Surprise! Another survey by Rathbones found that around 12% of small and medium-sized enterprise owners said that they are considering relocating either themselves or their businesses abroad because of tax concerns. And favorite destinations obviously include United Arab Emirates, where there are no taxes, Spain, and the United States, of course. And given the market's reluctance to finance the British debt since Brexit, well, the bigger the outflow of big taxpayers, the bigger the budget hole in the UK, and the heavier the tax burden for those who decided to stay. So you can prepare a tissue box for Wednesday. There will be some tears on the horizon and not happy ones. So this is all for this Monday. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.